A very good morning, everyone. Thanks very much for joining us on behalf of Astral Resources, ASX ticker AAR. It's great to have you join us for this live investor webinar. My name's Nicholas Reid from Reid Corporate, and we're very pleased to have Marc Ducler, Astral's Managing Director, join us this morning to talk about the scoping study for the Mandilla Gold Project that was released yesterday. Mandilla is located in one of the best gold districts in the world, just 70 kilometres south of Kalgoorlie, and it boasts a sizable resource of 1.27 million ounces. This includes 1 million ounces contained in a single conceptual open pit, making it one of the few undeveloped gold deposits of scale in the area. Yesterday's scoping study gave investors their first real insight into the potential of Mandilla, and they clearly liked what they saw, marking the stock up some 15% to 8.2 cents, giving it a still modest market cap of around 65 million. And as the respected resources commentator Barry Fitzgerald wrote this morning in his column, the robust figures in the study suggest that Astral's market cap remains underdone. Well, we're going to hear some more from Marc this morning about why that could be the case. So Marc, look, great to have you on board. Just a reminder to everyone watching, we will take questions. Marc's going to step through a few quick slides and then we'll open the forum and make this as interactive as possible. So please use the Q&A tab and fire your questions in. Marc, congratulations on the study. Please walk us through it.
No worries. Thanks, Nicholas. Thanks for the introduction. So certainly today, I want to do like a brief summary of that scoping study. Certainly it's not going to be a page turn of that entire document. So, and hopefully we'll be done in 10 to 15 minutes, and then certainly we can take some questions. So just starting off with the mineral resource estimate. Each mineral resource estimate that we've done over the 3-year period, 5 successive mineral resource estimates now, each time we've done that, we've actually grabbed it. It's been done at a $2,500 gold price. We've then actually done an optimization, design and a schedule, and actually put it inside a financial model with some capital and operating costs that we had from a scoping study exercise that we did back in 2021. And the main reason we were doing that was to just get an understanding of where the scale of Mandilla was, so that we knew when we were going to get to that scale where it was going to be robust enough to actually do a fully fledged scoping study and release it to the market. So the scoping study that we released yesterday is effectively the product of several iterations of this work that we've been doing through the journey. The July 23 mineral resource estimate really did set the scene for this scoping study. Thea got to 1 million ounces in a single open pit. Importantly, the indicated ounces jumped 69%, and that's really important because from an ASX perspective, when you're putting out a scoping study, it's really important to have that 70% indicated, 30% inferred. It's almost an unwritten rule as a guideline from the ASX. And even more impressively for us, during the payback period, inside 12 months, we're actually over 80% indicated ounces. So it's a very de-risking aspect, and you get that opportunity to be really confident about your ability to pay back the debt. Moving into some of the physical numbers here, 7.8 years worth of mining. We're mining at Thea, then EOS, and finishing with Hestia. There's 2 240-ton diggers and 2 180-ton trucking fleets. The second digger moves to EOS once the pit floor or available pit floor in Thea starts to reduce to the point where the interactions just aren't appropriate for the 2 digger fleets. And that's sort of year 5, year 6, where we start moving towards EOS. Now, EOS is a higher grade operation, but a higher strip ratio. And you can see that kick up in grade towards year 6 there. Processing, we processed for 10.8 years. The first 7.4 years, we're at 1.3 grams per tonne, producing 100,000 ounces per annum. Then we do 3.4 years of processing at 0.5 gram per tonne. So that's effectively as the mining rolls off and we finish treating the high grade and medium grade grade bins. We then end up in the low grade and all the low grade bins and feed that for 3.4 years, producing 40,000 ounces per annum. From a cash flow perspective, those first 7.4 years, we're averaging $80 million per annum of free cash flow. And then that second phase is of 3.4 years, we're at $40 million per annum of free cash flow. So even though the grade drops off significantly, treating half a gram material, we're still making $40 million per annum of free cash. As mentioned before around the indicated versus inferred, you can see that on that graph on the left-hand side, 80% indicated for the first 3 years, which gives us really good coverage to get the debt repayment done, and then 70% indicated over the life of mine. 845,000 ounces produced over the journey. The strip ratio is 6.1. Importantly, Thea, which is where the majority of the ounces come from, that strip ratio over the life of mine is 5.7. Now, just moving into some of the financials from a CapEx perspective, $191 million worth of pre-production capital, $68 million of that is pre-production mining and G&A up until the point where we start gold production. So $81 million in the plant, $4 million worth of owner's costs, $10 million in non-process infrastructure, $8 million for the TSF, $5 million for bulk earthworks, and then $15 million worth of contingency. From a sustaining capital perspective, we include a capital allowance. So if we need to replace some capital items during the life of the process plant, there's actually a capital allowance there of about 2% of the capital cost, which ends up being $9 million over the life of mine. And there's also a tailings storage lift of $6 million, which gives us an extra stage on that integrated tailings dam within the waste landform, and then also sets up EOS and Hestia for in-pit TSFs right out to the end of the life of mine. Closure, there's $8 million for closure and rehab as well. From an operational cost perspective, all-in sustaining costs around $16.50. The average mining cost is $4.69 a tonne over the LOM, and that equates to about $11.58 per BCM. We did a bit of peer review to see where our peers were at and where some of the producers, and we're pretty comfortable with that mining cost allocation. Processing is sitting at $17.40 and G&A is $1.30 a tonne. Now, with some of the financial metrics, we certainly believe they're actually very solid for this scoping study. We used $2,750 for the gold price revenue assumption. The gold price hasn't actually traded down to $2,750 since March of this year. And in fact, over the last 180 days, it's only spent 30 days below 2,900. So we're quite confident that we've used a pretty conservative revenue assumption there. The project EBITDA is $950 million, undiscounted pre-tax free cash flow of $740 million. The NPV, we used an 8% discount rate. There's quite a lot of feedback in the market about with the cost of capital, having an appropriate discount rate for the project, and certainly 8% is probably better than our peers. And the NPV 8 is $442 million, so it's still very healthy there. Internal rate of return 73%, and as I already mentioned, the payback for that pre-production capital happens inside the first year. In terms of the actual quality of the study, I think it's important just spending a little bit of time on that. Obviously, the amount of risk is proportional to how detailed that study is. And in the areas that really matter, so that's the geotech and the mine design, we are very advanced. So the geotech is at a feasibility level of study specifically for Thea. At EOS and Hestia, we have done the diamond drilling, and that is currently going through assessment from a geotechnical perspective, and that'll obviously come in the subsequent stages of study, as in the pre-feasibility. And so we've used the Thea assumptions for EOS and Hestia, but bear in mind, of the 845,000 ounces, 800 is actually coming from Thea, and that's done to a feasibility level. Mine design and scheduling is certainly at a feasibility level as well. Pricing for the mining, we used AMC Mining Consultants to price that from a first principles perspective back in May 2023, and that certainly meets the requirements for a pre-feasibility level. So mining represents 61% of our operating costs, and we've done that to a very high level of detail. So it starts to really de-risk the robustness and de-risk these financials that we've got for this scoping study. And I think it presents less risk as we move towards pre-feas and DFS. Now, moving on to processing and metallurgy. I think the key here is simple and low risk. The test work that we have done, which meets the requirements for a pre-feasibility level, demonstrated fantastic gravity recovery, absolutely amazing overall leach and gravity recoveries of over 95%, low cyanide consumption, moderate lime consumption, and there's certainly no nasty deleterious elements that the processing plant would have to deal with. And all of that is achieved with a really coarse grind of 150 micron. I mean, I saw some metallurgical test work come out from a peer just this week and indicating that it's free milling at a 50 micron grind size. I mean, without wanting to cast shade on someone else's metallurgy work, a 50 micron grind size is hardly free milling. And the amount of power you need to go from 150 micron to 50 micron is the sort of amount of power that would almost render the process uneconomic. So we don't have any of those technical risks. From a flow sheet perspective, stuck with very simple and very proven technology, 3-stage crush, single-stage ball mill, leach and absorption. The advantage with the 3-stage crush and single-stage ball mill, apart from the fact that it's cheaper from a capital cost perspective, given our ore type, and cheaper from an operating cost perspective, is that it just gives you a really wide ability to feed in other ore sources. 3-stage crush, single-stage ball, you can almost throw any material type you like, and you can get an efficient grinding outcome, and that's what we've chosen. So just before I move on to exploration upside, other aspects from the scoping study, we've obviously covered the waste landform design, the integrated tailing storage facility, which is built into the waste landform design, and we've done that to minimize the costs, because the single biggest expense of building the tailings dam is actually carting the waste for the embankment walls. So having the tailings dam effectively inside the waste dump removes a tremendous amount of that cost. So that's why we've gone with this integrated waste landform that's got tailings and mine waste. Power we've done via a build, own, operate contract. It's got 30% renewables included. The infrastructure allows for diesel storage, offices, heavy vehicle workshop, light vehicle workshop, stores, admin offices, mining offices, geology offices, mines, rescue, first aid. All of that is all included as a line item in the COMO CapEx numbers. There's also an allocation in the COMO CapEx for a bore field. And we've done the preliminary studies around flora and fauna and Aboriginal heritage and hydrology. Certainly a lot of work is required to get that to the next stages, but we're well placed given the scoping study level that we've reached yesterday. We've already started work on the pre-feas aspects. So, and fundamentally, the main aspect is continuing to improve the quality of the mineral resource estimate. We've got 3 drill rigs on site at the moment. We have a conditional simulation study that we'll be working on in the December quarter to look at how this ore body performs as it goes from inferred to indicated and then to measured. So that's going to be an important aspect. And even though it's really early days, looking at the debt carrying capacity that this project is likely to deliver as we get to definitive feasibility. So that all of that work is already in the background and happening. Just want to quickly focus on where the additional upside exists as well. So we're certainly not naive to what happens in the industry as you go from scoping study to pre-feasibility and that potential capital cost creep. But to offset that, we're very confident that both Mandilla and Fayetteville has a tremendous amount of upside to actually backfill any creep that we might potentially get in the CapEx. And even before the exploration upside, there's some value engineering that we can do within the capital that we certainly believe will deliver some cost savings to mitigate any eventual creep. And also just from an operational cost perspective, when we priced this scoping study was May 23 and And from an inflation perspective, things were still running really hot. And one specific example was cyanide was at the time priced at $5,000 a tonne. Cyanide is our number one reagent cost in a gold process plant. And speaking to some gold companies just a couple of weeks ago, that processing or that cost for cyanide is actually reduced from 5,000 to a number that's now got 3,000 in front of it. So a substantial saving that we can potentially see as we move through into the subsequent stages of study. Now, just focusing then on the exploration upside separately from CapEx and OpEx is, as I said, we've got 3 rigs on site. Recent history has suggested that we can grow the resources at Mandilla for $17 an ounce. And we actually certainly plan on trying to continue that performance going through into 2024. We've got the air core, the RC and diamond all happening on site at the moment. And then if we just think about Camperman, which are the 2 sections that I've just put on that slide on the right, since January, we've only drilled 9 holes at Camperman, so a really, really modest exploration effort to date. But of those 9, 4 of them have actually come back with greater than 50 gram meter results. And there's a historical hole there as well. So given that there's such a small amount of drilling at Camperman, we've got 4 meters at 95, 35 meters at 2.2, 21 meters at 4.2, 13 meters at 9, and 10 meters at 4.6. So Camperman is absolutely a genuine exploration target that has some real potential for significant high grade, which we can then supplement into Mandilla. And so to put that into context as to why that's so important is the Mandilla project has feed for 10.8 years, but within 3 years of us starting our processing, we actually start to feed that low grade material bin. So when you look at the scoping study, we've got 4 grade bins there: high grade, medium grade, low grade, and mineralized waste. And that low grade starts to come into the process plant within that 3rd year. So any high grade that we can find from an alternate ore source will actually have an order of magnitude impact on improving what are already some very robust fundamentals for the Mandilla scoping study. So just in closing, we have a high quality mineral resource estimate, and that is the basis for the scoping study. We have a high quality scoping study itself, and the important sections around mining and geotech are done to a significantly better standard than scoping. Very simple metallurgy, very simple processing. We've used assumptions for cost and revenue that are realistic. You could even argue that the revenue assumption is conservative at $2,750 for gold price. We are highly levered to the gold price, so that orange box in the corner sees what the project looks like at a $3,000 gold price, and we're only $10 or $15 off that price today. And you see that an additional $200 million worth of free cash flow for effectively today's gold price. So very highly levered to that positive movement in the gold price. And we will continue to add value with the drill bit. We have added value with the drill bit over the last 3 years, and we certainly plan on keeping that going. So thank you very much for your attention. Nicholas, I'll just throw back to you in respect whether there's any questions.
Thanks very much, Mark. That was a great run through. And just a reminder to everyone who's listening in online, please use the Q&A tab to log your questions. Mark, I might just start with a quick one. You've had a good response to the scoping study. No easy achievement these days, and the stock is up. And again, I see this morning. I mean, what do you see as the next key value catalysts for Astral, say in the next 3 to 6 months?
I'll say, look, I think certainly we will continue that effort with the exploration drill bit. So that's, as I said, we've got the 3 rigs on site at the moment. We will have air core and RC results out over the next 3 to 4 weeks. Given the effort at the moment, that diamond drilling, it's going to take us a while for us to actually process that. So the diamond drill results will probably follow later into October and potentially November, but we will be drilling pretty much up to the Christmas break. And once we get the geochemical results from Camperman, then we'll plan where we think we need to be going next with Camperman, and quite potentially we're going to feel that the higher priority drill target for us will be Camperman, and we'll potentially switch that exploration effort from Mandilla to Camperman before the end of the year. And I think that geochem is going to be important, because when we look at the RC chips and the lithology at Camperman, it's actually pretty hard to distinguish the different rock units, and the geochem is going to give us that information and help us to plan the next target. So it will realistically be drilling. And as soon as we actually can put some resource numbers around Fayetteville, I think we'll very quickly be able to demonstrate how much this project is levered to additional grade and revenue assumptions, because we can very quickly throw it into our financial model.
Thanks, Mark. That's sort of a good lead into the next question here, which is around Fayetteville. Obviously, as you say, some pretty impressive results that you've put out in the last few weeks. How do you see that satellite deposit potentially fitting into the broader Mandilla mine plan, and how could it provide that next sort of uplift, if you like, in the project?
Yeah, so the interesting thing is I sort of alluded to it a little bit in the presentation there, is when we look inside that, our detailed production schedule, we see the low grade coming in to the mill feed within that third year. And so that means we're feeding, based on that grade, being 0.6 to 0.8 grams per tonne. And Camperman at the moment looks as if it's going to be obviously substantially better grade than that. So there's a real opportunity to push that production profile up even from year 3. And on the basis that we do that, well, then that cash flow is going to have a significant impact, because all of the costs are covered. The business is already exceptionally cash flow positive, and then that's just additional cream. If you can put 2 grams per tonne instead of 0.6, then you're putting something that's going to generate $200 worth of revenue instead of something that's going to generate $60 worth of revenue on a per tonne basis. So it's almost got a logarithmic impact to the revenue stream.
Thanks, Mark. The question here from Ross Brown is a good one. Has there been any deep drilling at Mandilla, and is there an expectation that the resource will grow as mining progresses?
Well, yeah, short answer is yes. I mean, we terminate our diamond holes about 440, 450 meters downhole depth, and it's actually still mineralized at the bottom of the hole, and pretty much always has been. At the moment, we're terminating that on the basis of where we think the pit has that economic capacity to drive down to. But what we have found at the bottom of hole is this laminated style of veining, so a little bit thicker quartz veining than the tensional veining that we see. And that's actually running at a relatively high grade, and that shear and laminated veining that we're seeing at the bottom of the pit is actually a target of the current diamond drilling, because if we can demonstrate that it's actually pervasive along multiple drill holes. So at the moment we've hit it in about 3 diamond drill holes on a relatively similar RL. So if we can demonstrate that it's pervasive across the pit floor, then when we actually model that up, we can demonstrate that mineralization should flow, rather than it being tightly confined just around the drill hole intersection itself, which is the way the model currently works. So there's certainly capacity to grow Thea at depth, and the structural review that is ongoing with Gerard Tripp, we haven't got those results yet. He's done his initial review of the core, and he's got some concepts that he want to deliver to us, whether it's later this month or early next month. But there's certainly some targets that he's keen for us to sort of go and test as well. So certainly opportunity to continue to grow it there.
So lots of exploration upside there, Mark. How do you balance the sort of twin approach, I guess, of progressing the project down the value curve through the PFS, or up the value curve through the PFS, against pursuing some of these exploration opportunities, both at Mandilla and Fayetteville?
Well, I guess first answer is we certainly want to keep drilling. We acknowledge that that is a fantastic way to add value for our shareholders. And the second aspect is there's quite a few work streams within the pre-feasibility that don't cost a lot of money, but they just take time. So whether that's the waste rock characterization, tailings characterizations, making sure we do the additional flora and fauna surveys in the seasons where you need to do it, because if you miss those seasons, then you're actually stuck waiting another year for a survey. So there's a fair few that we can do rather cost effectively. Some of the pieces of work that will cost more money are going to be around the hydrogeological work, because we're keen to find some good quality water. We believe it exists within our tenure and certainly to the south. And we'll just need to have a look at balancing that funding priority of exploration versus advancing the pre-feasibility once we need to start doing those more expensive pieces of work. So I'm hoping I've appropriately answered that question.
Yeah, no, that's great. Thanks for that. Quick question here, just when can we expect, what's the timing of your next batch of assay results, and where will they likely be from?
Yeah, so the next batch will be the Thea RC infill, which includes a few of the pre-collars that we did for the diamond drilling. I think there's the last 3 holes to go, so I'd imagine within a couple of weeks those results will be available. With the air core results that we released at EOS, it would have been a month or so ago. Some of that was done on 4-meter composites, so we've got the resplits for those, and that'll probably come out inside the week or two. Mind you, it's not a significant release, other than we've actually seen some really positive reconciliations from the 4-meter composites to the 1-meter subs, and so we'll put that into the market as well. So probably the air core within a week or so, and then the RC 2 to 3 weeks, and then we'll flow with more air core from that EOS program that we're just finishing, and then into the diamond results.
Fantastic. So plenty of news flow to come. Just a final one here, Marc. If you could, we're continuing to see a lot of M&A in the gold space. You know, lots happening over in the Leonora region. Can you give us any thoughts on that potential, given where Mandilla is located? You know, relative to a lot of big players.
Look, I've certainly made no secret of the fact that there is 30 million tonnes per annum of processing capacity in our region, and with the recent announcements from both Evolution and Northern Star, another 15 million tonnes per annum of capacity being installed. And also that given this area is as mature as it is, that because we've been mining gold here for over 120 years, an open pit deposit of the scale of Mandilla, they simply don't exist. When I've done our review of what deposits have similar scale to us within this Kalgoorlie-Kambalda region, it's only the Super Pit and Northern Star's Red Hill deposit, and then us. So whilst I can't speak for the majors, I would suggest that some of those majors with large processing plants are going to struggle going forward to fill their mills, and potentially this project will be attractive. From our perspective, we will run at continuing to grow the value and run at continuing to de-risk it through higher quality phases of study, being the pre-feasibility and the definitive feasibility over time.
Fantastic. Look, that's great, Marc. Oh, hang on, here we go. Another question's just popped up. Do you have the Super Pit?
Yeah. Well, look, the Super Pit's a monster, so no. But we've got what people would refer to as a monzonitic porphyry, and let's see what the structural work from Gerard Tripp turns up as to whether it changes the way we think about the mineralization at Thea specifically, or Mandilla generally, being associated with the granite sediment contact. Maybe there is another source for that mineralization? And if so, then potentially changes the scale and the way that we think about it. I mean, it's certainly been a fertile tenement package, given our capacity to find deposits within a pretty small package, and our capacity to continue to grow this resource over time.
It's an enticing thought to leave with investors. Marc, if we've dealt with the questions, maybe just if you just want to finish up, just giving everyone 2 or 3 key takeaways just to think about over the weekend here and beyond.
Yeah, look, now that the scoping study is out, I think it demonstrates that this is a genuine project, and over time, the market should value the company on what the potential of that project has, and that certainly provides an opportunity, because I fundamentally believe that we are undervalued given the scale of this project, and so we will work really hard towards closing that values to the betterment of our shareholders. I think that's a really key point. And $17 per ounce worth of exploration cost, certainly over the last 2 mineral resource estimates, a fantastic opportunity for us to grow that at Camperman now as well. And bear in mind, we haven't done a mineral resource estimate for Fayetteville. There's 55,000 meters worth of drilling in the database there. And as we improve our understanding, I think there's a couple of resources that will pop up near surface, supergenes, that will be incredibly value accretive to Mandilla as it goes to feed that base load. So I think there's significant opportunity to continue to grow the value of that Mandilla scoping study as we move forward.
Fantastic. Thanks, Marc. Look, that was a great run through. Thanks for your time this morning, and thank you to everyone for dialing in. A recording of this, as usual, will be emailed out and available on YouTube later today. So, Marc Ducler, thank you from Astral. It's a great story, lots of news flow and upside to come. Thanks everyone for joining us this morning, and have a great day and a good weekend.
Cheers. Thanks, Nicholas.